Ladies and gentlemen, my name is Ben Lim. I am the CEO of Intercontinental Trust Limited, a management company licensed and regulated by the Financial Services Commission in Mauritius. I would like to welcome you to this webcast today, organized by Intercontinental Trust, PwC Mauritius, and CNA Law on the new substance requirements for Mauritius GBC1. My co-speakers today are, on my left, Anthony Lenching, tax partner at PwC Mauritius, and on my right, Giles Atto, director at CNA Law. The webcast is expected to last for 1 hour and is divided into two parts. In the first part, the speakers will review the existing requirements for GBC1 and will also examine in detail the new requirements. The second part will be the question and answer session. To ask any question during the presentation, please use the chat function on the Q&A section at the bottom left-hand side of your screen. Ladies and gentlemen, since the inception of the global business sector back in 1992, Mauritius has always been ahead when it came to establishing tax residence for GBC1 companies. In order to be a tax resident in Mauritius, a GBC1 had to comply with a list of conditions which have remained more or less the same for the past 2 decades. In the budget speech last year, the Vice Prime Minister and Minister of Finance and Economic Development, the Honorable Xavier-Luc Duval, stated that Mauritius will be increasing the commercial substance for GBC1. We believe the change was prompted by the increased scrutiny on offshore centers and the objective of strengthening the image of Mauritius as an international financial center. On 4th September this year, the Financial Services Commission issued additional requirements for GBC1 companies. The FSC have also revised the list of compulsory guidelines it considers relevant while determining whether a company is being managed and controlled from Mauritius. So what we have now is 2 sets of requirements for GBC1. The first set is a compulsory list of 6 conditions which has to be satisfied. These conditions have been here for a long time, and we know that FSC has introduced some small changes to them. The communiqué of 4th September 2013 has brought in a second set of 6 tests for determining control and management. Satisfaction of any one of them, together with the initial 6, will suffice in demonstrating that the company is controlled and managed from Mauritius. Further, the new conditions will be deemed to be met if any one entity in a group structure satisfies any one of them. For the sake of completeness, let's go through the initial list of 6 compulsory conditions. Number 1, the GBC1 shall have or has at least 2 directors resident in Mauritius who are appropriately qualified and are of sufficient caliber to exercise independence of mind and judgment. There is a new requirement here for the directors to be appropriately qualified. Previously, an experienced but yet unqualified local Mauritian would have been able to act as a director of the GBC1, but now the FSC will check on the qualifications of the candidate as well. We believe someone with a university degree or a professional qualification such as ACCA will be accepted. Condition number 2, the GBC1 shall maintain at all times its principal bank account in Mauritius. Here the GBC1 can have multiple bank accounts anywhere in the world, but the principal one must be in Mauritius. The Mauritius bank account must be used for inflows and outflows, such as investment proceeds, dividend payments. These flows must go through the Mauritius bank account. Third condition, the GBC1 shall maintain its accounting records in Mauritius. Accounting records mean detailed trial balance, journal ledgers. These can be prepared in Mauritius or elsewhere, but updated copies must be sent for safekeeping in Mauritius. Condition number 4, the GBC1 shall prepare or propose to prepare its statutory financial statements in Mauritius and have them audited in Mauritius. So the auditor must be a local firm in Mauritius. Condition number 5, the GBC1 shall provide for meetings of directors to include at least 2 directors from Mauritius. This is very important for central management and control. It is recommended that the chairman for the board is located in Mauritius as well. Condition number 6, the GBC1, which is authorized and licensed as a collective investment scheme, closed-end fund, or external pension scheme, is administered from Mauritius. Although this is a new addition to the list of compulsory conditions, it was a practice already for CIS to be administered from Mauritius. I have covered the compulsory list of conditions for a GBC1. I will be more than happy to take in any questions at the end of the first session. Now, Anthony Rengshing and Giles Atto will elaborate on the new set of conditions. Let me remind you that a GBC1 needs to comply with at least one of the new conditions, and there is a provision of borrowed substance where it is sufficient for one group company to meet one of the new conditions, and the whole group will be considered as compliant. Over to you, Anthony.
Thank you, Ben. Well, what I'm going to be covering today are 3 aspects of the new commercial substance rules. Namely, the first one is in respect of the office, secondly, in terms of people, and thirdly, in terms of expenditure. The necessity to have an office or people in Mauritius is not necessarily a new requirement. As Ben indicated earlier before, global business companies are required to have a registered office in Mauritius, as well as 2 local resident directors. Yeah? So effectively what the new substance requirement are trying to achieve is to build on existing practices and encourage companies to set up more local physical presence through tangible and visible business structures. Yeah? So in terms of tangible business structures, one of the first items that can be done is through the office setup. So what the guidelines provides for is that a corporation has or shall have office premises in Mauritius. Here, just having a registered office through the management company may not be sufficient. Yeah? What we are expecting is for the company to sign a lease or rental agreement with a third-party landlord and to make monthly or quarterly payments thereon. A lot of questions we are getting at the moment relates to what size this office needs to be. Yeah, what size that needs to be. It's really a matter of judgment, I would say. Essentially, what the office should be is of sufficient size to allow for the person to undertake the functions which is being carried out in Mauritius in a decent working environment. Yeah? And given that businesses are typically run via electronic means nowadays, and there is little need for physical storage, the office can be of a relatively small size. But what I'm not saying here is that the office can simply be a desk space or a cubicle. I think there's a minimum level of privacy or enclosure that needs to be there and present. The second substance condition which I'll be talking about is about employees. What the guidelines provides here is that a corporation shall employ at least 1 person resident in Mauritius on a full-time basis and at an administrative or technical level. What we'll be expecting here is that the person will be an employee of that company and be physically present in Mauritius. In terms of administrative and technical level, this would really depend upon the nature of the business. For example, in terms of an investment holding company, administrative and technical may include back office accounting or investment monitoring, for example, while for a trading company, administrative and technical may include invoicing, data collection, or customer service. The intention here is really for the administrative and technical function to take place in Mauritius and for someone or a person to be recruited to assume that role. So the focus should be equally on the administrative and technical function as well as the need to employ a person in Mauritius. The question we are getting a lot on this one is whether there is a minimum level of qualification that this person needs to have. Yeah? And again, I would say that a judgment needs to be called there. As long as the person has the appropriate qualification in terms of academic or experience, this should be sufficient for them to assume this role. So the third and final point on substance that I'll be covering is on expenditure. And here the guidelines provides that a corporation has or is expected to have yearly expenditure in Mauritius, which can reasonably be expected for a similar organization centrally managed and controlled from Mauritius. The principle behind this test is essentially that to the extent that a company is resident in Mauritius, the likelihood is that they would incur a significant level of expenses in Mauritius. And this would include expenses solely incurred in Mauritius and does not include services from abroad. Yeah. For example, in terms of investment holding entities, the type of expenses we would typically expect include things like directorship fees, registered office, company secretarial, accounting and auditing, travel and hotel costs to attend board meetings from Mauritius, etc. Based on our experience of similar companies in Mauritius, we would estimate that the annual running cost of a company being centrally managed and controlled from Mauritius to be in the region of $20,000 US. But the big question is whether this $20,000 US would be sufficient. Yeah? And what yardstick or what benchmark would be used to assess the level of reasonableness of that level of expense? In that respect, the guide to the global business is of use. And what the reference is there is that factors such as the type of the business, the turnover, the value of the assets, or the industry average are of relevance. But we should not forget, Ben also mentioned earlier, that the test or the condition can be met at a group level as well. So effectively, the level of expenditure expected for one investment holding company or a group of 10 investment companies are likely to be different. And the reasonable tests allow for this flexibility to assess things on a case-by-case basis. Many investors have expressed concerns about whether the reasonableness test actually has too much subjectivity so that it creates an element of uncertainty and makes it impractical to apply. That may not necessarily be the case. If we look at our domestic tax law, for example, in there the reasonableness test or the reasonableness principle is applicable under a number of circumstances. For example, in assessing the tax deductibility of expenses, management fees, remuneration to shareholders, we use the reasonableness test principle. In practice, we do not necessarily see the complexities of the application of the reasonableness test. And these guidelines or these principle has been around for over a decade in our domestic tax law. So overall, the reasonableness test, although there is a degree of judgment and subjectivity, it allows for things to be considered on a case-by-case basis and to be tailored to the current business structure. So given our business and investor-friendly climate, the reasonableness test should be viewed in a more positive light. Okay, so that ends my part, and now I'm going to pass on to Giles Atto, who is going to be speaking on the 3 remaining substance requirements.
Thank you, Anthony. The 3 remaining requirements that I'm going to deal with are firstly the possibility of a company to include in its constitution an arbitral clause. The second one would be the possibility by the company to hold assets in Mauritius for a minimum amount of $100,000. And thirdly, the possibility of listing the company's shares on a recognized securities exchange in Mauritius. Coming up to the first requirement that I'm going to tackle is the arbitration clause. The requirement states that the corporation's constitution may contain a clause whereby all disputes arising out of the constitution of a company shall be resolved by way of arbitration in Mauritius. It's very well in line with the authority's ambition of making Mauritius an international arbitration center of choice, especially for the African region. And it's very interesting to also note that in line with all these requirements, Mauritius has won the bid to host the 24th ICCA Congress in 2016. It's also interesting to note that this conference will welcome more than 1,000 delegates from all over the world to Mauritius. Another aspect which the authorities have dealt with in relation to the arbitration was the enactment of the International Arbitration Act 2008, which was promulgated in 2009 and also amended in 2013. The Act is based on the ancestral model law as amended in 2006 and is of course in line with all international standards. Another interesting aspect is that the authorities have set up a new international arbitration center in Mauritius under the name of LCIA-MIAC, which is in fact a joint venture between the London Court of International Arbitration, the Mauritius International Arbitration Center, and the government of Mauritius. In addition, we also note that the Permanent Court of Arbitration of The Hague has also established a permanent office in Mauritius. So all these tend to show that the authorities are actually promoting Mauritius towards that international arbitration center of choice in the African region. Now, coming up with the new requirement which the FSC is proposing, we tend to note that there are 2 aspects in it. Firstly, that the Constitution will have to be amended to provide for this arbitration clause. And secondly, that the arbitration will have to be resolved in Mauritius. It's very tempting and very enticing as well for certain GBC companies which are actually wholly owned subsidiaries to opt for this option because it's very unlikely that they would be having shareholder disputes arising to the extent that it's only one shareholder. But due care must actually be taken when, for instance, a new shareholder would come into that company where that new shareholder will need to actually be made aware of this arbitration clause in the Constitution. Another aspect of this arbitration clause is the actual drafting of it, because you will note that under the arbitration clauses, there is the juridical seat which needs to be taken into account, as well as the geographical location of the arbitration. Very often we note, and there's a slew of case law on that, that certain arbitration clauses have actually been rendered void by certain courts for lack of certainty, and that dealing with obviously the juridical seat and the geographical location of the arbitration. So it's very important when we consider the FSC's requirement that the arbitration needs to be conducted in Mauritius. So it's quite unclear at the moment whether they are actually talking about the juridical seat of the arbitration to be in Mauritius or the geographical location of the arbitration to be in Mauritius. Well, our view is that if we take into account all the requirements and the aim of the FSC, we seem to be of a view that it's actually both the juridical seat of the arbitration and the geographical location of the arbitration which will have to be in Mauritius. But of course, we are aware that certain representations have been made to the FSC to seek clarifications on that, and we will be awaiting for a confirmation note or a circular letter from the FSC to actually clarify the issue of whether the arbitration seat as well as the geographical location of the arbitration will need to both be in Mauritius. So coming up to the second requirement which I'm going to deal with today is the possibility of a company to invest in Mauritius and hold assets of a minimum of $100,000. The requirement provided by the FSC states as follows: the corporation holds or is expected to hold within the next 12 months assets which are worth at least $100,000 in Mauritius. But this would exclude cash held in bank accounts or shares or interest in another corporation holding global business license. Now, we have had a few queries from our clients already as regards this requirement, because as the law stands now, it is not possible for a GBC1 to actually invest in Mauritius or hold assets in Mauritius without obtaining the prior express approval of the FSC. Now, of course, it seems that this requirement is at variance with the current law, and we know for a fact that a few proposals and representations have already been made to the FSC in that respect, and we should be expecting the FSC to come up with an amendment of the law as regards this requirement. But the question which still needs to be raised is how much business can actually be conducted in Mauritius as opposed to the business conducted outside of Mauritius, and also whether the income which is derived from business in Mauritius need to be less than the income derived from outside of Mauritius. So we are eagerly awaiting for the FSC's requirements as regards this new condition which is being proposed by the FSC. Coming up now with the third requirement which I'm going to deal with today is the possibility of listing on the Stock Exchange of Mauritius. This requirement actually states that a corporation's shares can be listed on a securities exchange licensed by the Commission. It's worthy to note that the only securities exchange which is currently licensed by the FSC is the Stock Exchange of Mauritius. And the Stock Exchange has earned international recognitions throughout the years that it's been set up. It is a member of the World Federation of Exchanges. It is recognized by the UK HMRC as a stock exchange. It is also recognized as an approved stock exchange by the Cayman Islands Monetary Association, the CIMA, and is also a member of various stock exchange associations throughout the world, including the African Securities Exchange Association, the South Asian Federation of Exchanges, and the Committee of SADC Stock Exchanges. It is also worth noting that the SEM has actually won for the second consecutive year the Most Innovative African Stock Exchange of the Year award. So this shows that the SEM is very present and is very recognized worldwide. And along this line, the Stock Exchange of Mauritius has also proceeded with an amendment of its existing listing rules, whereby it has provided more flexibility of listing global business funds and also listing specialist debt instruments as well as global business companies. In that respect, Chapter 18 has been provided in the listing rules and provide for the listing of global business Category 1 companies. A brief overview of Chapter 18 provides as follows. The GBC1 can actually list, trade and settle in Mauritian rupees, in USD, in Euro and in British pounds. The GBC1 can also list without having the 3-year track record, provided it can provide a solid business plan and submit same to the SEM. The minimum market capitalization is 20 million Mauritian rupees, which is roughly a bit less than 700,000 US dollars. The GBC1 can also list with less than 200 shareholders and also have less than 25% in public hands. Another interesting aspect of listing as well is the possibility of technical listing, whereby the shares are only listed on the exchange but are not publicly tradable on the exchange. Of course, the fact of listing will have certain implications to existing GBC companies, and among these will include an enhanced compliance and reporting requirements to the authorities, the need to actually convert into a public company, and this will also imply that the filings made with the Registrar of Companies will no longer be confidential. And this means that all documents which are currently filed with the Registrar of Companies will be publicly available. So this ends my presentation on the last 3 requirements by the FSC, and we'll now move on to the question and answers session.
So the first question is from Azam Bacchus, Country Tax Manager at Standard Chartered Bank in Mauritius. Will the corporation's registered address in Mauritius suffice, or does it have to be the actual office space? I will ask Anthony Langshing to reply to this question.
Yes, one of the current requirements on substance is that a GBC1 needs to maintain or keep its accounting records at its registered office in Mauritius. So by virtue of the current condition, the registered office is already an existing condition. So what the new substance requirement is all about is about GBC1 having an actual physical presence. So an actual physical office.
Thank you, Anthony. We have a second question concerning office. Anthony, perhaps you can also answer this one. It's from Anju Lochi, Chief Accountant, ZTE, Mauritius. And the question is, can a GBC1 use the same office rental contract but on the name of a domestic company?
As we outlined earlier, the new substance condition can be met on a group basis or on an individual company level. So to the extent that a company within the same group meets at least one of the new requirements, the whole group would be deemed to meet the conditions. The question here, Ben, I think, is that whether a rental contract entered into by a domestic company, so a local company, would satisfy the new conditions. Unfortunately, the group definition for the new substance guidelines are restrictive, and related companies only includes GBC1 entities only. So to the extent that there is a lease or rental contract with a domestic company within the group, this unfortunately would not be sufficient for the new condition based on the current wording.
Thank you, Anthony. And I believe it also answers the question asked by Anil Narshi from Woolworth, South Africa. He was asking whether a domestic company would be able to satisfy the requirements, and I believe Anthony has replied to this question. Giles, there is another question coming here. It's with regard to arbitration clause. How does the arbitration clause add substance to the structure? Giles?
Yes. This is a very pertinent question, as this requirement is the only one from the list which is somewhat passive in nature, to the extent that it will only become of relevance upon an event triggering such arbitration. But if we look at the general trend adopted worldwide as regards alternative dispute resolutions and the OECD's approach towards encouraging arbitrations for tax disputes, we feel that there is a tendency to favor such approach rather than court litigation. And this must also be viewed from the broader perspective of the Mauritian authorities, aiming to enhance Mauritius as a jurisdiction of substance, in line with the promotion of Mauritius as an international arbitration center of choice. Of course, any act which furthers the objectives of the government will be viewed favorably. In addition, this arbitration clause will create the potential use of the whole spectrum of the professional services in Mauritius should the clause be invoked in the future. For instance, it will involve the use of professionals in Mauritius. It will involve the use of logistical facilities in Mauritius, for example, accommodation, transportation, including flight connections. It will also involve the use of technical support that can be provided, as well as the hearing facilities for the arbitration itself. And these are only but a few of the services that may be sought from Mauritius. And the use of these facilities can only help to strengthen the investors' ties with Mauritius, which is what substance is really all about.
Thank you, Giles. There's a third question from Akhilesh Rupan, Senior Partner at Advantage Public Relations. To what extent will these new requirements help trigger a strategic shift in the Mauritius industry model? Well, the Mauritius model has been here for the past 20 years. Mauritius has always insisted that in order to be a tax resident in Mauritius, you need to adhere to a number of strict conditions of central management and control. What we've done in Mauritius now is to evolve, okay, based on the OECD standards, based on international tax practices. We would like to make Mauritius a jurisdiction of substance. And I believe this is a first step towards the integration of the Mauritius global business sector and the domestic sector. Another question, and this is from Sudesh Jawahir, Director of Regulatory Affairs and Compliance, Monsoon Capital LLC. The question is, will these changes harm Mauritius? This is a good question. I believe these changes will drive away tax treaty business with no substance. In fact, Mauritius has always preferred substance over form. And these changes will retain businesses with substance. And I believe this is a new direction which the Mauritius tax treaty business is going for. Next question is from Jaislan Kupsami, Financial Manager at SECOM. What is a yearly expenditure in Mauritius that can reasonably expected? What's the amount? Okay, I believe, Anthony, you've covered this during your presentation. If you can just recap this for Jaislan Kupsami.
Yeah. Basically, I mean, that's the million-dollar question, Ben. What amount of expenditure would be sufficient to meet that test? As I said in my earlier intervention, what the guidelines currently provide is very limited. The only reference we have in terms of how to assess the level of reasonableness of expenses are conditions such as the type of activity, the value of the assets contained in the structure, or industry average. As I said, I mean, based on my experience, expenses incurred in a GBC1 typically range between anything between 15,000 US dollars to 25,000 US dollars. Whether that's going to be sufficient or meet the test, that's the question. Yeah. I understand that the Financial Services Commission would be issuing new guidelines on this matter, and my comment would be, let's wait and see.
Anthony, there's a lot of questions coming in with regard to the India tax treaty and any connection between the substance, the new substance requirement, and the current negotiation going on between India and Mauritius. So there's a question here, is there a link between the new GBC1 requirements and the renegotiation of the tax treaty between Mauritius and India?
Okay, well, Ben, I think I'll point to your comments you made earlier. The existing condition on substance has been in existence for almost 20 years now, since the inception of the global business sector in 1992. Mauritius has always positioned itself as a jurisdiction of substance, and in light of the changing attitudes towards international financial centers, it was high time for Mauritius to revisit its business model and to see some of the requirements for companies to operate in Mauritius. Given the timing of the release of the new substance guidelines, I can see why people are kind of thinking the issue between the substance guidelines and the tax treaty negotiated are linked. However, I don't really think that's the case, because if there's any concern that we had with India, this could easily have been addressed directly within the confines of the tax treaty itself, and there wouldn't be a need to issue a national policy on this. In my opinion, this is a broader issue and something that reflects the government policy in terms of the global business sector.
Okay, next question is from Ramphal Sanka, director at Matco Limited. The question is the list of requirements provided by the FSC exhaustive, or can the FSC take into account other consideration in determining management and control? Giles?
That's an interesting question, Ben. According to the Financial Services Act, in determining whether a company is managed and controlled from Mauritius, the FSC will have regard to such matters as it may deem relevant in the circumstances. And without limitation to the foregoing, the FSC will also consider the list of requirements which we have enumerated earlier. So it is therefore possible that the FSC takes into account other considerations in determining whether a company is being managed and controlled from Mauritius. But we will not recommend any applicant to disregard compliance with a list of requirements provided by the FSC. While it may be true that the FSC would consider such applications on a case-to-case basis, it's highly unlikely, well, it's highly likely rather that an application based solely on circumstances outside of a list provided by the FSC will cause substantial delays without also any guarantee of success for the application compared to an application which already satisfies the requirements of the FSC.
Okay, next question is from Bing Begin, consultant at Eco-Pation Technologies Limited. The question is, how will these changes affect business in Africa? We need to look at the changes from the point of view of the tax authorities in the investee countries. What these authorities will see will be more substance, more commercial substance, and this is going to strengthen the reputation and credibility of Mauritius as an international financial center. Just recently, on Sunday, I believe the Observer has published an article, a report by Action Aid, targeting Mauritius as a platform into Africa. And I believe with more substance, we will be able to counter those type of reports. So by bringing more substance to Mauritius, I think we're going to be, this is going to be the new objective of the Mauritius jurisdiction. Now the next question is from Anil Narshi again from Woolworth, South Africa. Can the financial statements be prepared in South Africa for a GBL1 company but audited in Mauritius? Anthony?
Yeah, that's one of the existing requirements. I mean, the requirement is that, yes, it can be prepared outside South Africa, but it also needs to be maintained and kept in Mauritius. So what typically happens is that, although it's prepared in South Africa, a duplicate copy is also maintained at its registered office in Mauritius. So this is possible, and it's currently practiced by some multinationals as well.
Okay, we have a question here from Johan Hatting from PwC. Has the OECD or any other international organization or foreign government, for example, India or South Africa, issued any statement welcoming the new substance requirements? Not yet. Okay, we are not aware of any notice or any report that has come out in the aftermath of those new requirements, but certainly we will keep you posted. Okay. We have a question from Dynasty Services Limited, Dukit Amanullah. Our company is a GBC1 and has an office in Mauritius. Can you advise what is the implication if we add such a clause to our constitution? That is, what are the steps involved and the cost implication? I believe he's talking about the arbitration clause, Giles.
Well, the implications of inserting such a clause in the constitution would firstly need to be to obtain shareholders' approval. So it should normally be a unanimous approval of the shareholders, and then amend the constitution either by way of resolution or inserting a new clause in the constitution by repealing the current one and adopting a new constitution. Of course, the cost implication of these will be subject to the administrators, so it will depend on whether the it will depend on the fees which the current administrators will normally impose for effecting such amendments to constitutions. Of course, you'll also have legal fees which will be involved as well. For instance, lawyers will need to perhaps draft the arbitration clause and, of course, issue a legal certificate following the amendment of the constitution. So we can't tell any fees available because it varies from administrator to administrator and service provider to service provider.
Giles, we have another question with regard to the office premises and the provisions in the constitution. This is from Leapfrog Investments, Gianluca Del Bianco. Question is, if you choose the option to have an office in Mauritius and set up a rental agreement, are there other costs that you need to incur to comply with this provision? Giles?
Well, it will depend on the terms of the agreement itself. Of course, when we talk about costs involved, it's always good to have the agreements vetted by council to ensure that they are valid and enforceable under Mauritian laws. But other than that, I'm not sure if he's also referring to any arbitration clause in the rental agreement or in the constitution, but the arbitration clause in the rental agreement can also be inserted, and this may also be in line with any arbitration clause in the constitution itself, just to ensure that any disputes arising out of any agreements, including the constitution, will be in line and will have certainty as to how they are going to be resolved.
Thank you, Giles. Next question from Samad Naim Ogentus, Fund Administration. Question is, what is a way out for companies that use administration services in Mauritius? Will they meet the employee requirement? Tony?
Yeah, I think the employee requirement is very clear in this regard. What the new guidelines requires is that the company or the corporation shall have at least one person in Mauritius and employed on a full-time basis. So what is expected here is that the GBC1 would actually need to employ a person in Mauritius. So using the services of the management companies won't be of use.
Okay, we have another question concerning employees. This is from Christian Wang, Orangefield Mauritius Limited. Question is, can a management company's employee be dedicated to the GBC1 on a full-time basis, meet the requirement of the FSC? Well, the requirement says that the GBC1 has to employ someone, okay? So if it's merely someone employed by a management company but allocated to the GBC1, it will not work. So the GBC1 will have to employ this person, okay? There are a few questions coming with regard to the effective date of the new requirements. The effective date is 1st of January 2015, okay? Now, next question is from Cross-Border, Navin Nagawa. There is a model arbitration clause in the Arbitration Act of Mauritius. Can a GBL1 use this clause in their constitution? Giles?
Certainly. The International Arbitration Act provides for circumstances where international arbitration will occur, and a GBL1 will fall, and issues arising from GBL1 companies will fall within the definition of an international arbitration. And the Act also provides for a sample or form of the arbitration clause, and it's actually advisable or recommended to use that form to avoid any uncertainty as regards the arbitration clause.
Okay, one more question, Giles, on arbitration. This is from Jaisalan Kupsami from CECOM again, concerning the arbitration to be in Mauritius. Will this have an impact? Will this have any impact to change, for instance, contracts with customers which have a different arbitration place?
We need to clarify the situation as regards the requirement for an arbitration clause. The requirement for the FSC is that arbitration would only, the requirement by the FSC is that any disputes arising out of the Constitution can be resolved by way of arbitration, and this will involve amendment of the Constitution. Now, this excludes any outside contracts between the company itself and service providers. But having said this, if the company wishes to align itself with all the requirements, it is also possible that it amends its existing contracts to make it available in Mauritius, or it could also maintain the existing arbitration clause in a different jurisdiction or a different venue.
Okay, we have one question from Jennifer Lowe from Macquarie Services Hong Kong Limited. For several GBC1 entities under the same group, if one of the entities has a full-time employee and salary payout, all other entities of the group satisfy requirement 2 on having full-time employee, even not all entities incur salaries expenses. Is that correct? Anthony?
Yeah, I mean, as we said before, the new substance guideline contains a group test. So effectively, if one company, and that company needs to be a GBC1 under the current wording, meets at least one of the 6 conditions, then the whole group would deem to satisfy the new guidelines. So to the extent that one of the GBC1 entities employ a full-time person, then the whole group would satisfy the new guidelines.
Okay, we have a question from Kamal Hawabai, Global Wealth Management Services. No country other than India has asked for any expenditure-related requirements on account of substance, whether with regard to double taxation agreement or otherwise. Is Mauritius doing too much, and can this backfire? Yes, I believe he's correct in saying that only India has asked for a certain level of expenditure, and this is clearly can be clearly seen in the India-Singapore Treaty. However, from a Mauritius point of view, I believe if we want to evolve from a pure investment holding jurisdiction to an international financial center, I believe this is the way to go. We need to make sure that those companies have substance in Mauritius, incur expenses in Mauritius, and vis-a-vis the overseas tax authorities, we have a possibility of arguing our case that those companies are centrally managed and controlled from Mauritius, and also effectively managed from Mauritius. Giles, there seems to be a lot of questions on arbitration. So there's a question from IFS, International Financial Services, Ashish Lachowa. In your opinion, how far will the arbitration clause alone be deemed to be sufficient for substance from a foreign tax authority's perspective? I believe you covered this point in one of the first questions that we asked, but perhaps you can just answer this one as well.
Well, from a foreign tax perspective, this will depend on very much on the authorities themselves and how they view having an arbitration clause in the constitution of a Mauritian company. But just to recap, it's only a way from the authorities in Mauritius to enhance the presence of Mauritius as an international arbitration center worldwide and also in the African region. And we seem to have a positive response from outside countries as well as regards the arbitration clause.
Thank you, Giles. We have a question from JP Morgan Asset Management, Will Ahmad. Question is, would the chairman of the GBC1 have to be a permanent appointment and be in Mauritius for all meetings, or can the position rotate depending on which director is in Mauritius for board meetings? Let me just clarify one thing. We're talking about chairman for the board, not chairman of the company. The chairman of the board, we strongly recommend that the chairman be in Mauritius. So if it happens that the overseas directors are visiting Mauritius for a physical board meeting, then any one of them can act as chairman of the board. So it answers a question with regard to the rotation as well. Okay. So let me just look at the other questions that has come in. This is from Elemental Minerals, Ilja Growlich. Question is there an advantage for African investment in registering their business in Mauritius versus BVI, for example? Tony?
Yeah, I mean, Mauritius is known for having a network of tax treaties, not only tax treaties, but investment promotion and protection agreement as well. And effectively, many of multinationals are now using Mauritius not only for the tax treaty network, but also because of the infrastructure that Mauritius has in terms of banking institution, in terms of financial services, and they're using Mauritius as their headquarters for Africa. So I think Mauritius has the opportunity there in terms of the skill set and the people and the treaty network.
Okay. Next question is from Wickes Smith, United Ventures. With regard to the group test, and apologies if I missed this, is there a minimum shareholding requirement to qualify as a group? That is, does a holding GBC1 have to be a certain minimum shareholding in the other GBC1 subsidiary companies? Tony?
Yeah, the group test, I mean, there is no specific definition here, but I think the Companies Act, if we refer to the Companies Act, what they have there is the definition of control. So to the extent that a parent has control over the subsidiary and all those entities are GBC1 entities, that should meet the control test and the subsidiary parent definition.
Okay, we have a question from John Mather from of Mason Forbes Limited. If we are to hold substantial assets, will we be able to own real commercial property without the need for Prime Minister's office involvement? Well, no. I mean, the GBC1 will be able to own property in Mauritius subject to receiving all the consent and approval from the authorities in Mauritius. So yes, you will continue you will need to apply to the Prime Minister's office for approval. Okay, so ladies and gentlemen, we have arrived at the end of this webcast. We apologize if we have not been able to answer all your questions due to the limited time available. The recorded webcast will be available for download and the link will be sent to you by email. Thank you for dedicating your time to this webcast and goodbye.